everybody, so a lot has happened. Here we are, episode 4. It is March 14th, 2020, and if you're brand new to investing, it's been a wild ride for you initially, or if you are still sitting on the sidelines, with some money ready to go, this is probably one of the best opportunities to start thinking about getting into the market in the last 10 years, or 10 years plus actually, since 2008, 2009. So with that, let's go ahead and start looking at kind of where we're at. Portfolio was doing phenomenal. Late February, we were up like $1,400 in the profit, but then this whole coronavirus started. And it has caused mass panic, mass hysteria. Things are shutting down. Airlines, flights, cruises, schools, sporting events, all that stuff is just getting shut down right now. And it's causing a lot of panic in the stock market, which, you would expect that to happen, especially with, people just staying at home and stuff like that, and, not really out spending money and pumping money into the economy. So, double-edged sword. Yes, I already have quite a bit of money invested, so yes, we're going to show in the red right now. But I don't know if I've ever been so excited as an investor, because I missed 2008, 2009. I didn't start actually stock trading until several years after, and as I was learning about trading and stuff like that, I was like, man, I wish I would have gotten in 2008, 2009 when stocks were at just like all-time lows. There was so much money to be made. Well, now we're kind of getting that opportunity again, because this will pass. This virus it's here. It's probably still going to spread for a while, but eventually we're going to come out of this. And that's where I'm getting super excited for the long-term future. And right now I'm constantly still pumping money in every paycheck. Just did it again last paycheck, and I completely changed my strategy. I went away from tech companies and I went towards the airline industry and what was the other one? I did Boeing, American Airlines, Delta, Royal Caribbean Cruise Lines, and United. I'm going after the big ones because they've already seen more than 50% drops in just the last month, and I'm going to keep pumping money into them until I find the bottom. And once this whole thing goes away and they start to recover, there should be some serious money to be made on the back end of this. Not to mention these companies pay great dividends too, and with the stock price dropping more than 50%, I mean, they're paying out even their dividend percentage is just unreal. Like I think it's Royal Caribbean right now, their dividend percentage is 10.5%. So think about that. So with that, let's look at where we are. So even though the coronavirus was still kind of ramping up in February, we actually did turn a small profit in February of 2020. For the month, we were up 1.14%. I know that's not a lot. It was much higher. We were up like 8 or 9% for the month. And then the coronavirus started to really hit hard, and that's when the plunge started. So for the month, we officially finished up 1.14%. Now rolling into March, we're halfway through March already, and for the month, we're down 9.74%. It is what it is. Like I said, I'm not worried about this at all. If anything, this makes me super excited because I'm getting such a huge discount on shares that, I mean, it's just unreal. Some of the prices that we're going to be paying moving forward, and this is why, like I said in the beginning of episode 1, I think it's so important to have an emergency fund, right? So once these stocks do start to really slide, you can start cost averaging, right? I had a stock just the other day that was 16% down, and I doubled the amount that I had originally put in. So I immediately went from 16% to 8% down, right? And then that day the stock went up 5% after I bought the new shares. So I went from 16% down to 3% down overall in that one stock in just one day. So very, very important to not hit the panic button, right? If you're doing this, you should be in this for the long haul. That's advice straight from Warren Buffett, right? think of this as, long-term investments. Yeah, there's short-term investments out there, but I'm not advocating for day trading, right? I'm pushing for more long-term stuff for you guys. There's nothing wrong with day trading. It requires a lot more attention, though, but that's completely separate. So, all right, let's look at overall numbers. So, overall account value, we're up to $11,526. Profit as of 1 January when we started this, 2020, we are now officially down just over $1,000 at $1,046. Just since the last episode, we're down $1,345. It is what it is. Like I said, this coronavirus stock market reaction is not over. There's going to be a lot of volatility over the next, at least the next few weeks, I would anticipate. Just last week, we saw 2,000 point swings in the same week, which are all-time records for the history of the stock market. So believe me when I say this is not over. There's going to be more swings. I didn't buy any stocks yesterday because it was a green, like stocks were way up. I did buy a lot on Thursday. And because of that, you can already see that my Boeing, American Airlines, and Delta stocks are up officially. Not a whole lot. I didn't pump a whole lot of money into them. I put about $200 in each. That way I could keep some money in my emergency fund. But I guarantee you next week I will be pumping more money in if they continue to slide downward. So I can get those cheaper shares. I can start building my dividend portfolio even more and stuff like that. So what's my best performing stock right now? Actually, it's Boeing. Believe it or not. I don't have a lot of money in it. I bought one share of it because Boeing still is a $160 stock, or it was when I bought it. Now it's $170. But I'm officially up 6.38% in that one. Worst performing stock is now Enphase. I think last episode it was my best performing. It's one that's really taken a big hit right now. Luckily, I think pumped in $700 or so into it, so I'm only down $137 overall in that one stock. Facebook is my second lowest one. For a while has been one of my top performers, and it's down 16.07%. So in this case, normally I would start pumping in more money into it to bring the percentage that I'm down lower, but I'm really going to seize the opportunity to pump money into these travel stocks like Boeing, Delta, American Airlines, United, Royal Caribbean, because I would anticipate they might continue to slide. That to me makes sense, especially with the travel restrictions from Europe or a lot of the countries in Europe. Now the Department of Defense restricting travel for permanent changes of station and TDYs and stuff like that. Travel is going to come to a halt, at least in the near future. At least that's how we're trending. So with that, I do anticipate that some of these stocks will probably continue to slide, even after they had a huge gain on Friday. So don't panic. I know for a lot of you that may have just started, it's really tough to stomach, seeing that you're down. But you don't officially lose money until you actually hit the sell button. So think of it that way. Yeah, you're down, but think of it long term. And this comes from years of experience. I had Facebook a long time ago, bought in when it was $27 a share, right? 2013, they just IPO'd, and I put a lot of money into it. I had just over 1,000 shares, right? And immediately after the IPO, it went from around $27 to $17 and some change. So almost a 50% drop right out of the gate. And yeah, it sucked looking at that humongous red number, but I didn't panic. I held on to my shares, and it took 9 months for it to come back to the price that I paid for it, right? So because I didn't sell any shares, when it came back 9 months later, I broke even. I actually turned a small profit because I think I sold it like $29 a share, so I made like $2 a share. And I remember at the time, I was like, whew, man, I sold like 99% of my percentage. I was like, cool, I got out of that, without any harm. But here we are, 7 years later, and the price per share is $170 per share. If I would have held on to that 1,000 plus shares for 7 years, look where we would be. 1,000 times $170 per share. So that kind of sucks. It does hurt being in the red. At least in terms, you have to have a strong stomach. That's what I've been kind of telling some of my new people that have been reaching out to me. You have to have a strong stomach when it comes to the stock market sometimes. It does fluctuate, and it's going to swing wildly in the near term. So stay the course. I wouldn't panic. I'm definitely not panicking. I will keep making videos, and you will see me continue to buy. I can't remember how many stock companies I had last episode, but I didn't have this many. I'm up to quite a few companies now that I'm starting to buy into. I think just since the last episode, I've probably bought into 7 more companies. So more to come. I will definitely be buying some more companies probably next payday. I'm looking at Disney right now. Disney just shut down their parks. ESPN, what are they going to do with no sports to cover? All these companies that are owned by Disney, yeah, I will be looking to buy some of their shares very soon. So with that, hope you guys enjoyed this episode. Hopefully you enjoyed this mustache that I'm growing for Mustache March. If you haven't already, go ahead and click the like button and the subscribe button, and I'll see you in a few weeks.